So welcome back guys. In this session we'll be discussing all the multiple choice questions and the comprehensive problems which we have left out in the marginal costing chapter. So the first multiple choice question, what is this? They are telling that we have to determine the margin of safety if profit is 15,000 and the PV ratio is 40%. So what is the formula for margin of safety? The formula is, it is profit divided by the PV ratio. So what is our profit here? It is 15,000 and we have to divide it by 40% and that will be our answer. Simple question and simple answer. So what is our requirement here? We have to calculate the margin of safety and they have given straight away everything. So they have given the profit of 15,000 and the PV ratio is 40%. If I divide, I'll get 37.5. So this one was a simple question here. We determine the margin of safety. Next, see, next question is even more simpler. So what is the margin of safety if sales is 20,000 units and the BEP is 15,000 units? So tell me what is the answer. Very simple. The total sales comprises of break-even sales and the margin of safety. Here they have given total sales of 20,000 units. In that BEP is 15,000. So my margin of safety will be 5,000 units. So very simple questions that we are seeing here now. Next we'll go to the third one. So now this question is bit tricky. Please give your attention here. So first they are telling that we have to calculate the margin of safety. To calculate margin of safety we need two things. One is the profit, one is the PV ratio. They have given sales as 3 lakh and BEP as 4,50,000. So they are telling that total sales is divided into two parts. One is margin of safety, one is break-even sales. Here the break-even sales is more than the actual sales, which means the company is having loss. So can we determine the margin of safety here? Since BEP sales is more than the actual sales, we cannot calculate the margin of safety here. So option C would be the answer, because BEP sales is more than the actual sales. So we should have made a sales of 4,50,000 as per the question, but we have made actually 3 lakh. So now we don't have any margin of safety here. What is margin of safety? Any sale over and above the break even, that is known as margin of safety. That is the reason we have the formula profit by PV ratio. In BEP the formula is fixed cost by PV ratio or fixed cost divided by contribution per unit. So that is the reason here we don't have any margin of safety sales. Next we will go to the fourth one. What are they telling? Determine the sales in rupees if the desired profit, for the desired profit, if fixed cost is 10,000, variable cost is 30,000, sales is 50,000 and the desired profit is 5,000. So if you remember, I had given a formula for desired sales. What is our formula? Desired profit plus fixed cost divided by the PV ratio. First we need three things. One is the desired profit, one is the fixed cost, and the third thing is the PV ratio. Here we have two things, I guess. We have the desired profit as 5,000 and we have the the fixed cost is, that is 10,000. Total 15,000 numerator. So denominator it should be PV ratio. How do we calculate the PV ratio? Contribution by sales. So what is the contribution here? 50,000 divided by 30,000. So 50,000 divided by 30,000, minus 30,000 is equal to 20,000. So 20,000 is my contribution. So what is my PV ratio formula? Contribution by sales into 100. So here it is 20,000 divided by 50,000 into 100, which means 40% is my PV ratio. So if I divide it by 40%, it will be 15,000 divided by 40%, it is again 37,500. So now we have calculated the sales here. So now we can cross verify. Like I have the sales of 37,500. My PV ratio is 40%. Into 0.4 you will get the contribution, that is 15,000, minus the fixed cost of 10,000, you will get 5,000 as the profit. So the underlying formula for this question is that we have to find the desired sales. The formula for desired sales is that desired profit add the fixed cost divided by the PV ratio. If suppose we have to calculate into amount, if suppose it is in units, we will be dividing it by contribution per unit. Next we will go to the fifth question. So what will be the sales in rupees for desired profit? If the fixed cost is 30,000, desired profit is 15,000 and the PV ratio is 30%. So same as previous question. So I will do it in a simpler manner. Add 30,000 plus 15,000 divided by 0.3. So you will get 1,50,000. Simple. You can make a note here only. 30,000 plus 15,000 divided by 0.3. So 1,50,000. Simple. Next we will jump to the sixth question. Sixth question, we have to use some statistical formulas here. So they are telling that calculate the sales in rupees for desired profit if the fixed cost is 10,000, selling price is 20 rupees, variable cost is 15 rupees and the desired profit is 1 rupee. Understood? We don't have the sales here. So now we will calculate. So sixth we will have a working note. So first we will write the income statement. What is our income statement? Sales minus variable cost, we will get the contribution, minus the fixed cost, we will get the profit. Understood? So here we will take it as X. We will take the number of units as X. So sales price is 20X, variable is 15X as per the question. 15X, profit is 1X and the fixed cost is 10,000. Okay. So here we have 10,000. Here we have 5X. 5X minus 10,000 is equal to 1X, which means X. 1X or X, both are same. Now we have to solve this equation. So 5X minus 10,000 is equal to X. So if I transfer X this side, it will be 5X minus X. So if something is coming on the right hand side, from the right hand side to the left hand side, it will be minus. So if it is positive on the right hand side, it will become negative on the left hand side. So this is basic mathematics. So here it is minus 10,000. When it goes to RHS, it will be plus 10,000. So 4X is equal to 10,000. So X is equal to 10,000 divided by 4, which is 2,500. So now I have the value of X. So just multiply it by 20. That's all. So here I have the sales, which is 20X. So I just multiply 20 into the value of X, that is 2,500. 20 into 2,500, which comes to 50,000. Simple. So now I am denoting the number of units with X, then calculating the formula. So 20X is my total. So sales price is 20X. Then I deducted the variable cost of 15X. I got 5X. So I have the fixed cost of 10,000, but my profit is 1X, which means 1 rupee here. So I broke down the equation into for calculating the value of X. Now the value of X is 2,500, which means the number of units is 2,500. Just multiply with the number of or the per unit sales, per unit value. So by this we have completed this sixth question. The value is 50,000. So sixth is done. Now we will jump into the seventh question. What is my seventh question? They are telling that the sales in units, we have to determine the sales in units for the desired profit. Okay. If the fixed cost is 15,000, desired profit is 5,000 and selling price and variable cost are 20 and 16 respectively. So first we will calculate the contribution per unit because they are asking sales in units. So the numerator will be fixed cost plus the profit. So 15,000 plus 5,000 divided by 20 minus 16, which is 4. See here I will be getting 5,000 units. So please be careful with the option. They have given 5,000 also, they have given 5,000 units also. In the question they are asking units, so the answer will be A. Next we will see the eighth one. So what is the eighth one? What will be the sales in units? Again they are asking units. Fixed cost is 50,000, contribution per unit is 60 and desired profit per unit is 10,000. So we have to calculate the sales. Simple, apply the logic which we have applied to sixth question. 60x minus 50,000 is equal to 10x, because we have to find the number of units. 60x we understood, no? 60x is nothing but the contribution. Contribution minus the fixed cost will give you the profit or loss if it is a loss. In this case, they are telling that it is profit. So that's the reason I am deducting 50,000 from 60x. That is the contribution. I will be getting the profit. Now solve this equation, you will get the answer. Same, 60x minus 10x, because it is coming from right hand side to left hand side. Here it is minus 50,000, it will be positive 50,000. 50x is equal to 50,000, so x is equal to 1000 units. Please be careful, it is 1000 units, not the 1000 amount. Okay, so simple questions. Next we have the ninth question. So this is a bit tricky, I guess. We have to determine the BP in units and amount. Okay, we have to determine the break-even point. For that we need fixed cost, we need PV ratio, we will check that, and the contribution per unit. So now the units produced is 10,000, fixed cost is 40,000, selling price is 50, variable cost is 30. So my contribution or the PV ratio is 20 per unit or 20 by 50, which is 40%. So it is 40% or contribution per unit is 20. So my BP would be fixed cost is 40,000 divided by 0.4, which is 1 lakh. Contribution per unit is 20. BP in units. So I will divide 40,000 divided by 20, which is 2,000. So here the option is wrong, it should have been C is the correct answer. So the amount is 1 lakh and the units is 2,000. So concept wise we are good, but the option given is wrong. So just change the option. It should be 2,000 units and 1 lakh rupees. So if you can see 2,000 into selling price of 50, you will get 1 lakh. So our answer is correct. So you are just cross verifying. Next we have to determine the BEP. If sales is 1 lakh, variable cost is 50,000, profit is 20,000. So for determining BEP, we need two things. One is the fixed cost and other is the PV ratio. So here if we draw the income statement, it is 1 lakh minus 50,000 is the variable cost. So my contribution will be 50,000, which means my PV ratio is 50%. I have the profit of 20,000 here. So my fixed cost will be obviously 30,000. So if I divide fixed cost, that is 30,000 divided by 0.5, I'll get 60,000. So that is my answer. So simple. They are telling that we have to calculate BEP. BEP requires two things. One is the fixed cost, second is the PV ratio. Here they have given sales, they have given variable cost, they have given profit. So the remaining is nothing but the fixed cost. If you can see, 50,000 is variable cost, 20,000 is profit. Remaining 30,000 should be fixed cost only. There is no other chance as per the income statement. So I got the fixed cost as 30,000. Next, the formula to calculate PV ratio is nothing but contribution by sales. Here contribution is 50,000 divided by the sales into 100, we will get 50%. So my answer is A. So by this we have completed the MCQs. I hope every MCQ is easy and it is as per the marginal costing concept only, and nothing is new here. So next we will see the comprehensive illustrations, and I guess we have 10 illustrations. We will solve all of them, and unsolved cases also we will take up. So unsolved cases are simple, we will just walk through them also. Okay, now read the first question. So the first question. So they're telling that the company is having a annual sales of 10 CR and earning 12% profit before charging interest and depreciation. So they're earning EBIT or PBIT, anything, whichever you call. They're getting 12%, which means 1.2 CR is their EBIT. And interest and depreciation of rupees 60 lakh and 1 lakh, I'm sorry, 60 lakh and 100 lakh respectively. So interest and depreciation is 60 and 100 lakh. Okay. If the contribution by sales ratio is 40%, which means the PV ratio, calculate the break-even sales. So simple. Break-even sales, what is the formula? We have to calculate the fixed cost divided by the PV ratio. Here we have to assume that interest and depreciation is the fixed cost. What is fixed cost? Like which will not change irrespective of the production or the production units. Here, how much ever you produce, depreciation and interest will be same at all the levels of production. So that is the reason we will take these two as the fixed cost. So what is the total of them? 60 plus 100, 160 lakh divided by 0.4, which is nothing but 400 lakh or 4 CR. So I will write the answer. So BEP sales is nothing but fixed cost divided by the PV ratio. Here I have my fixed cost, that is interest plus depreciation divided by PV ratio. Here I have 60 plus 100 divided by 0.4, which is nothing but 400 lakhs. Simple. Next, we will see this second question. What is that? See, in a purely competitive market, which means there is heavy of competition, which means, example, you can take a soap industry. There everyone will be competing, ITC will be competing, other company will be competing, etc. So in a purely competitive market, 10,000 units of product, that is 10,000 units of product can be manufactured and sold and certain amount of profit is generated. Okay, they are telling that in a purely competitive, which means there is a lot of competition, they can sell 10,000 units. Next, it is estimated that 2,000 units of that product need to be manufactured and sold in a monopoly market. So monopoly means there is no competitor. Example, Indian Railway, it does not have any competitor. It is the sole authority which can run railways in India to earn the same profit. So the question tells that if you are selling in a purely competitive market, you have to tell 10,000 units. If you are in a monopoly market, you have to sell 2,000 units. Understood? So they are telling that they should have a target profit of 2 lakh in either cases. They should have profit of 2 lakh in both the cases, and the variable cost is 100 and the total cost is fixed cost is 37,000. Now we have to calculate the selling prices under both the monopoly and competitive conditions. So we have to calculate the selling price. To calculate selling price, we need the sales amount. We have the units, we have the variable cost, we have the fixed cost, we have the profit, we have the number of units. Calculate sales divided by number of units, you will get the selling price. That's it. First I will be working for purely competitive market. Okay. To calculate sales, first I should have the cost. So cost is two things here. One is fixed cost, one is variable cost. Then I'll add the profit. So profit is 2 lakh in either cases. They have told at the beginning only. Fixed cost is 37,000. Cool. Now the variable cost is 100 per unit and we have to sell 10,000 units. So 10,000 unit into 100, which comes to 10 lakh. So my total is 12 lakh 37,000 will be my sales. So units is 10,000. Simple. So I'll just divide by 10,000. It should be 123.7. Simple. So in this question they are telling that we have to calculate the selling price. To calculate the selling price, I should have sales. To calculate sales, I should have cost, I should have profit. Profit, they are telling that it should be 2 lakh. If you are going for monopoly or if you are going for purely competitive, you should have profit of 2 lakh. And the fixed cost will be same at any level of production. So it is 37,000 here. So 2 lakh 37 is fixed. Now the changes should be only in the variable cost. Variable per unit it will be same. At the aggregate level it will be differing. So here the number of units is 10,000. So 10,000 units into 100, which is 10 lakh plus 37,000 fixed cost plus 2 lakh profit. I will get 12 lakh 37,000 of sales. Just divided by number of units, you will get this selling price. B, monopoly. Same thing here. Cost, VC, FC. Profit is 2 lakh. Fixed cost is 37,000. Here the number of units is 2000 into 100. So 2000 into 100 is 2 lakh, I guess. So it is 4 lakh 37,000 divided by sales divided by units. So we'll get the selling price. So 4 lakh 37,000 divided by 2000, 218.5. That is the answer. Please copy. This was a simple question. So just we had to calculate the selling price. Next we'll go to the third question. So third question, a company has a fixed cost of 20,000. okay, it sells two products A and B in the ratio of 2:1. so if they're selling 2 units of A and 1 unit of B, okay, the contribution is 1 per unit of A and 2 per unit of B. What would be the break-even point? So we have to calculate the break-even point. So, and that too they are telling in units. So units means I should have two things. One is the fixed cost, one is the contribution per unit. So they have given contribution per unit and they have given the fixed cost. Simple. So but here we have two items. One is A, one is B. 2 units of A and 1 unit of B. Simple. So multiply 2 units into 1 per unit and multiply 1 unit and 2 rupees. So simple. See, this question is like this. So we have to calculate BEP in units. So my formula would be fixed cost divided by contribution per unit. So my fixed cost is 20,000. So for A it is 2 units, but the contribution per unit is 1. But for B it is 1 unit, but the cost is 2 rupees. So 20,000 divided by 4, which is 5,000 units. Simple. 5,000 units is the answer. Please copy. Simple question. They have given 2 products, that's all. Other than that, the formula remains the same. Next we will see the next question. So fourth question, mark it as important, it may be asked in examination. ABC Limited manufactures 3 products PQR, so they are producing 3 products. The unit selling price of these products are 100, 80 and 50 respectively. They have given the selling price. The corresponding unit variable cost is 50, 40, 20. Unit variable cost. By this, can we calculate contribution per unit? Yes. Just deduct the variable cost from this selling price. That's all. We'll get the contribution per unit. The proportion wise quantity in which they are manufactured and sold are 20, 30, 50% respectively. The total cost is 14,80,000. We have to calculate the break-even quantity. Simple. Just calculate contribution per unit of all the things PQR. You'll get some amount. Just multiply it by these percentages. You'll get a consolidated 1 CPU, which is the contribution unit. Then divide the fixed cost by that contribution. You'll get the sales, and you'll get the break-even point. Then multiply with the same percentages. You'll get the break-even point of each quantity. Simple question, simple thing. Please try it out. First step, calculate the CPU, the contribution per unit. Second step, multiply with the percentages. You will get a consolidated contribution per unit. Then calculate BEP, consolidated BEP. Then you will get the units. Then multiply in the same percentage, 20, 30, 50 for PQR. You will get the break-even quantity at the aggregate level also, at the product level also. So that is the thing here. Please do. Now I will solve. Please note it down. So here, my fourth question, I have 3 products P, Q, R. I have the selling price, I have the variable cost, I have the contribution per unit, then I have the percentages, then consolidated, then BEP total in units. So I'll have fixed cost divided by CPU, which means contribution per unit. So I have 14,80,000. I'll get some answer. Then P, Q and R. Just multiply by 20%, 30%, 50%. That's it. 20%, 30%, 50%. So now I'll write the selling price. It is 180, 50. 180, 50. Variable cost 50, 40, 20. 50, 40, 20. Simple. Here it is 50, here it is 40, here it is 30. Then multiply. 50 into 20% is 10, 40 into 30% is 12, 30 into 50% is 15. My consolidated contribution is 37. Okay, I'll just divide it by 37. So 14 lakh 80 divided by 37, which is 40,000 units. See, once I know all these steps, the answer is simple. So 40,000 into 20% is 8,000. 40,000 into 30%, which is 12,000. 40,000 into 50% is 20,000. See, so simple the question is, because I knew all the format. So that is what I am telling you. First calculate the contribution per unit, then calculate the consolidated contribution per unit, then calculate the number of units in B, calculate the BP number of units, then distribute it. Simple. So please copy. We have completed the fourth one as well. Let's go to the next question. 4 done. So now they're telling that a producer of ladies purses is earning a monthly post tax profit of 60,000, which means the profit here is that it is after tax. What is the profit percentage? 40%. After 40% of tax, my profit is 60,000. Okay, the selling price is of a purse is 50 rupees and variable cost is 30 rupees. So by this we can calculate contribution per unit. How many more purses should he sell to earn the same monthly post tax profit if the tax rate is 50%? Now at 40% tax he is earning 60 rupees. I mean 60,000. Now he is telling how much more purses should he sell in order to earn the same profit at 50% tax. Okay, first we'll calculate pre-tax. So here it is telling that after 40% it is 60,000, which means in 100, 40 would have gone for tax. So remaining is 60. So then in case of 60,000 means it is 1 lakh rupees. So simple, I'll show here. See, if 100 rupees is there, 40 rupees will go for tax, 60 rupees is remaining. So here I have 60,000, just cross multiply. So my pre-tax profit is 1 lakh. Okay. Now pre-tax profit is 1 lakh. Now if it is in old case, it should be 40,000. So my profit is 60,000 post-tax profit. So simple, here I have calculated pre-tax profit, which is nothing but 1 lakh. How did I get? Before tax. So you can do one more thing also. Just multiply profit, divide the profit divided by 1 minus tax. So which is nothing but 60,000 divided by 1 minus 0.4, which is 0.6. You will get the same thing. Just cross multiplication. So this is a layman way of finding, but in exam find this. So in order to make you understand, I am going by this method. Okay. Now he is telling that the profit should be same. Please understand. So the profit should be same means, but see, I'll do two things: pre-tax adjustment, post-tax adjustment. Okay. So pre-tax adjustment, the profit is 1 lakh, tax is 40,000. So my remainder is 60,000. Now they are telling that they should earn the same level of profit, but the tax is 50%. Just reverse calculation. So 60,000 is profit means 60,000 will be tax, because what they are telling, there is an increase of 50%. So 50, 50, 100. So my pre-tax profit would be 1,20,000. Understood? Is there any change between fixed cost in both the cases? No. The answer is no. So that is the reason there is a change of contribution by 20,000, and the contribution per unit is 50 minus 30, which is 20, which means 1000 units. So you should sell 10,000 units more to earn the same profit. I hope you understood. So simple, guys. Pre-tax it was 40% tax, post-tax it was 50% tax. Pre-tax I have calculated the pre-tax profit. How did I get it? Reverse calculation. I got 1 lakh. Now they are telling that they should earn the same level of profit, which means 60,000, but the tax rate is 50%. Understood? So now I recalculated it. So this is 50, this is 50, so this will be 100%. So pre-tax profit is 1,20,000, but the change is the change is 20,000, but there will be no change in fixed cost. There is only change in contribution. So that is the reason I divided profit change or the contribution change. So contribution change by contribution per unit. So I got 1000 units. Simple. Next is very simple. See, calculate the break even. So we have to calculate the break even. What is the formula for break even? Fixed cost by PV ratio, where the cost of the engine is 1 lakh and bogie is 20,000. My total fixed cost is 1 lakh plus 20,000, which is 1,20,000. Capacity is 80 passengers, ticket is 600. So my sales would be 48,000 in each journey. Now there is no fixed cost, which means I can't have the numerator for, so the numerator for contribution and denominator both are same. So it is 100%. So now to calculate the break even, I have the fixed cost, which is 1,20,000. I have the PV ratio, which is 100%. So now I will calculate it per unit. So nothing but, so 1,20,000 divided by 48,000, which means the contribution or contribution per train. So you will get 2.5. So just give me a second. So the answer is 2.5. So now the thing is, here it will be 1,20,000. So 1,20,000 is my total fixed cost, and the per unit is, I mean the per cost is 48,000. So I'll divide 1,20,000 divided by 48,000. It will be 2.5. So by this we have calculated the break even. So in order to achieve the break even, we have to cover the fixed cost. Here the fixed cost is 1,20,000. So 1,20,000 divided by the contribution per unit or per bogie. So if one so the capacity of bogie is 80 passengers and the ticket price is 600 and there is no variable cost here, only everything will be contribution. So that is the reason I divided 1,20,000 divided by 48,000, which means 2.5. So 2.5 bogie, or so 0.5 bogie we can't tell, so round it off to 3. So 3 bogies will give more than the BEP. So the actual BEP is 2.5. So next we'll go to the next question. So that is 7th one. So 7th, what they are telling, W Limited is a single product. So W Limited is a single product with PV ratio of 40%. They are telling the PV ratio is 40% during the current year. Due to the increasing competition, it is believed that the price will have to be reduced by 10% in the next year. So they are telling that the selling price will be reduced by 10%. See, take an example of 100 rupees. Okay, now 60 rupees is my variable cost, so 40 rupees is my contribution. That is the thing they have given here. Now if the price is reduced by 10%, it will be 90 here. Okay, then variable cost will be 60 only. Here it will be reduced to 30. So which means there is a reduction of 10 rupees. So now they are telling by what sales value or sales quantity should increase so that the W Limited earns the same profit in the next year also. We have to tell by how much thing the sales value or sales quantity should be increased. So now how do we solve this? First we have only the PV ratio. PV ratio is directly concerned with the selling price or the sales quantity. Now if suppose the sales price or sales quantity is reduced by 10%, then PV ratio is also reduced by 10%. So now PV ratio is reduced by 10%, which means 4%. So the new PV ratio will be 36%. So the reduction is 10%. So now that is the reason we have to increase both by 10%. If you increase the sales and the price by 10%, you will be achieving the same profit or the same contribution. So that is the logic here. So now the actual PV ratio is 40%. It is reduced by 10% because sales quantity or the sales price is reduced by 10%. So automatically your contribution will be reduced by 10%. So it will be reduced to 36, which means from 40 to 36 it will become. So that is the reason, in order to make the same contribution, you have to increase it by 10%. So that is the thing. Now we will go to the next question. So next question is simple. They have given the sales. So they have given the contribution is 40%, margin of safety is 20%, which means the BEP is 80% and the annual fixed cost is 24 lakh. We have to calculate the break-even sales, margin of safety, total sales, variable cost and the profit. Simple. First they have given margin of safety, annual fixed cost is 24 lakh and this contribution is 40%. So by this we can calculate the BEP sales. Be careful because we have the contribution PV ratio, we have the fixed cost, we can calculate the BEP. BEP is 80% because margin of safety is 20% here, which means remaining 80% is BEP. So we'll calculate it to 100%. So by that we'll calculate the margin of BEP, we'll calculate the safety, we have the total sales. Then if you have PV ratio, then variable cost is easy, profit is also easy. Now first I will calculate the profit, I mean the BEP. BEP is fixed cost by PV ratio. My fixed cost is 24 lakh and the PV ratio is 40%. So 40%. So what will be my answer? 24 divided by 0.4 is equal to 60 lakh is my BEP. Okay, BEP is 60%, 60 lakh, which means 80% of total. So 60 lakh divided by 0.8 will give me 75 lakh. So this is my total sales. How did I calculate it? 60% divided by 0.8. Why? Because 80, see, in the question they are telling the margin of safety is 20%, which means remaining 80% is BEP only. So that is the reason I divided it by 0.8. So my total sales is 75. So my first question is answered. Break even sales. Margin of safety simple. So total sales is 75 minus 60, which means 15. So done here. So my second answer is also done. Total sales is add both the thing, which is 75 lakh, done. So simple question. When you calculate one, everything will come out automatically. Next we have to calculate the variable cost. So that is simple. Sales VC contribution. So sales is 75 lakh. VC is balancing figure because I'll calculate the contribution. So contribution is 40%. So 75 into 4 is 30, which means my variable cost is 45 lakh. That's all. Now next we have to calculate the profit. So I have the thing here. So I have the fixed cost. I have the fixed cost of 24, which is the fixed cost 6. Done. Simple. So to analyze the question, it is very important because see, here they have given the PV ratio, they have given the fixed cost. By this I calculated BEP. BEP is 80% of total sale. So I divided 60 lakh divided by 80%. So I got 75 lakh, which is the total sales. By this I found out three things: BEP sales, margin of safety, total sales. Done and clear. First three concepts. Next, variable cost. So variable cost is difference between the total sales and the contribution. So I know the contribution ratio, which is 40%. I multiplied 75 into 40%, which is 30 lakh. So 45 lakh is the variable cost. Next, 30 lakh is the contribution. I subtracted the fixed cost of 24 lakh, which means 6 lakh is my profit. Understood? Simple. Just copy this. So I am giving the concept. Don't worry about the format in exam. Please give it step by step. Here I am giving only the concept to you. Shall we jump to the next question, which is the 9th question. So 9th question. A company sells its product at 15, which means selling price. So this is my selling price. Next, in a period, it produces and sells 8,000 units. So please be careful, they are selling 8,000 units. So my sales is 8,000 into 15, which means 1,20,000. It incurs a loss of 5 per unit, which means 5 into 8,000 is 40,000 loss. So 40,000 loss. Okay. Next, they are telling that if the volume is raised to 20,000 units, it earns a profit of 4. So we have to calculate the break-even point in terms of rupee as well as units. Okay, we have to calculate BEP in amount and as well as rupees. But to calculate BEP, we need two things. One is the fixed cost, one is the PV ratio. We don't have both. We have to calculate it here. See, if you remember, I had told a formula for PV ratio, change in profit divided by change in sales. So I'll just write that thing here. So PV ratio is nothing but change in profit divided by change in sales. So this was one formula for PV ratio. Here if you can see, first for 8,000 units, it incurred a loss of 5 rupees, which means 8,000 into 5 is 40,000. Okay, negative 40,000. Okay, then it made a profit of 4 rupees when it made a sale of 20,000 units. So 80,000. So the sale for 80,000 is the 20,000 into 15. 3 lakh. and minus 8,000 into 15, 1,20,000. Hope you understood. So greater number I have taken from the left hand side. So 80,000 is for 20,000 units and 3 lakh is for 20,000 units, and loss of 40,000 is for 8,000 units, and its corresponding says 1,20,000. So now if you can see here, please be careful here, it is minus here. So minus into minus plus. So that is the reason I will be rating here 1,20,000. Please be careful about this mathematics. So it is 1,80,000 here. My PV ratio is 66.67, which means nothing but 2/3. Hope you understood. We have got the PV ratio. What is the formula? Change in profit by change in sales. But here we have loss. So that's why I have written 40,000 here. But negative into negative, it will be positive. Basic mathematics. By this we have calculated the PV ratio. Now here only we will draw an income statement. Sales, VC, contribution, fixed cost, it will be profit. Sales, I will take the greater number, which is 3 lakh. P ratio is 2/3, which means 2 lakh will be my variable cost. So 1/3 will be my contribution. So I have my profit. How much is it? 80,000. So my fixed cost is 20,000. This we can verify for even this also. So 1,20,000 into 1/3, because it is so my PV ratio is 2/3 here. Oh, my bad, I have done one mistake here. It should be 1 lakh. Variable cost is 1 lakh, but so it should be 2 lakh. So my profit is 80, it will be 1,20,000. Sorry. So one small mistake here. So PV ratio is 2/3. So variable cost will be 1/3. So if you can go to the second thing, which is 1,20,000. So 1,20,000 into 2/3 is 80,000. Subtract the fixed cost of 1,20,000. We will get 40,000 loss. So we have cross verified that also. Now we have to calculate the main thing. Now what is that? BEP in units and BEP in amount. So simple. BEP is equal to fixed cost divided by PV ratio. My fixed cost is 1,20,000 divided by 0.667. So 1,20,000 divided by 0.667 means 1,80,000 is my BEP. Understood? Next we'll see units, whether can we calculate it for units. So I have my 15 rupees into 2/3 is 10 rupees. So if I divide it by, if you want it for per unit, I have to divide it by contribution per unit. Just give me a second. Okay. So now BEP in units is nothing but I'll calculate BEP divided by selling price is 15. That only is the answer. So 1,80,000 divided by 15 is 12,000 units. By that also we can find another way is contribution per unit, which means 10 rupees. So if you divide 1,20,000 divided by 10 is 12,000. So either of the way you will get the same answer, 12,000 units. Simple. Not much confusing, I guess. Now we will go to the last question of the day. 10th question. A company manufactures radios which are sold at 1600. See, they are selling at 1600. Total cost is composed 30% of direct materials, 40% for wages, and 30% for overhead. An increase in the material price by 30% and wages by 10% is expected in the forthcoming year. As a result of which, the profit is of current selling price may reduce by 40% of the present profit. You are required to prepare a statement showing the future profit at the present selling price. That's all. So here, have they told anything about profit? Like they are telling that the total cost is composed of 30% for direct material. 30% of what? They have not told. Here we have to make an assumption that that 30% is of selling price. So that is the reason. Now we'll make a note here. So this is my 10th question. I'm sorry. So 10th question. So SP is 1600. So my direct material, direct labor, direct expense. So will be 1600 into 30. I mean 30% is for direct material, 40% is for wages, and 30% for overhead. So here it will be 30, 40, 30. So it is 480 here, 480 here, here it is 640. Understood? So total is 600, which means there is no profit, no loss. Now this is important here. See, an increase in the material price by 30%. So my increased price is 30% of this. So 480 into 1.3. It is 624. I am rating the increased price here only. 624. And wage rate by 10%. So 10% means 640 into 1.1. It is 704. And have they told anything about the overhead? Nothing. So I'll just copy it. So 480. Just add it up. 624 plus 704 plus 480, which means 1808. So what is the change here? 208. So you have to increase the selling price by 208 if you want the same profit, which means 0. So you have to calculate a statement, you have to prepare a statement showing the current and future profit. Current profit is 0 because we have made an assumption that all the cost is based on the selling price, and future profit at the present selling price. So future will be at a loss of 208 rupees. So if you subtract 1600 from this, you will be at a loss of 208. So by this we have completed all the questions on marginal costing. So we have left out with few. I'll just discuss it out, then you can try. So first question, they are telling that we have to calculate the profit and loss under the absorption and marginal. So absorption is simple, add the total cost, multiply by number of units. Here we have, what is the total here? 2 plus 2 6, sorry 2 plus 2 4 plus 2 6 plus 3, it is 9 here. So just multiply 9 into how much units they have sold? 4000, and the selling price is 10. So it will be 40,000 sales minus, so 9 into 4000 is 36,000. So 4000. Then subtract the fixed cost, so 15,000. Here it will be 11,000. That's all. So 11,000 is the loss under absorption. But when it comes to marginal, please be careful. It will be 40,000. We will add only the variable cost. So 6 into 4,000 is 24,000. Contribution is 16,000, and the fixed cost is 15,000. Here it will be 1,000. So under marginal it will be 1,000, under absorption it will be 11,000 loss, because the main impact here is that fixed cost. Here we will be considering the fixed cost separately, even at unit level also, at the total level also. So by this we have completed the first question, a simple question. Next question is on the same grounds, so I will just give it as homework. So same, everything would be same, please try it out. And the third question, a company produces A company produces variety of products, each having a number of components. B takes 10 hours to process on a machine working to its full capacity. So it will take 10 hours and the selling price is 100. Okay, and the marginal cost is 50. Okay, so contribution is 50 rupees. Accepted. A component part which could be made on the same machine hours or 2 for a marginal cost of 15. The supplier price is 20. Should it make or buy? So if they are buying, they should pay 20. If they are doing in-house, it requires 2 hours. So the cost would be, here it is taking 10 hours. So 10 by 2 into 15, which is 75. So 75 or 20, this is better. Understood? Now we will go to the fourth question. So fourth question is simple. I'll just tell it off. So thing in fourth question is that they have given different sales price. Okay, selling price they have given separately, and they have given 50,000 units, and they have given the variable cost. First deduct it here only. 0.2 deduct, you will get the contribution. Okay, so contribution multiplied by number of units, which is 50,000, you will get the contribution amount, then deduct the fixed cost, you will get the profit. Whichever higher profit, go with that amount. That's all. Simple question. Next, the last one. So last one, they are telling plant capacity is 2 lakh, present utilization is 50%. Okay, selling price is 40, material cost, labor cost, fixed cost. So in order to improve the capacity, the following proposals. So reduce the selling price by 15%, spend additional 2 lakh. How much should be sold in order to earn the profit of 5 lakh? So simple, desired profit. So 5 lakh plus 18 lakh, my fixed cost. And one more thing, please be careful, this 2 lakh. So 2 lakh. Understood? This should be my total. Divided by what they are asking? Number of units. So selling price is 40, but reduce 15%. How much is that? 40 minus 15% is 34. So add it up. So 2 lakh plus 5 lakh is 7 lakh. 7 lakh plus 18 lakh is 25 lakh. So 25 lakh divided by 34 is 73,529. So this will be my total number of units to be sold to earn the profit of 5 lakh. Simple. So I hope you have understood today's session. So everything is easy in this chapter. So MCQs done. We have completed 10 MCQs, 10 comprehensive questions, and discussed the other illustrations as well. So please try this second one as homework. So it is simple. So by this we have completed the marginal costing chapter. So thank you. In the next class we will be doing the remaining topics. Thank you.